إن شجرة الزقوم طعام الأثيم.
Good morning, everybody. Welcome in this sessions, backtesting sessions. Uh, we have to, in order to win this game in Forex, we have to sharpen our skills because in the Forex, apart from trading psychology, also there are three things that actually we need to have in the Forex. We have almost three things that we need to have in the Forex. Example, let me try to draw this cycle right here and trying to illustrate how these three things can work, how these three things can actually work. Yeah, example, this cycle still represents the trading life of several traders in this world. The life of the cycle of several traders in this world. We can actually divide the things that we normally need to have in the forex in this chart or in this pie chart on this cycle. The first things that we as a trader actually need to have is just need to have a knowledge in the forex, a knowledge in the forex. Also, we need to have skills. And finally, that things that is not very crucial is just a lack. So these three things actually we as the traders we need to have. But these three things are just differ. It differ in terms of percentages. Differ in terms of percentages. The way you need to have a knowledge is different from the way that you need to have a skills, and then different from the way that you need to have a luck in the market. Example, this cycle. Let's divide this cycle in terms of percentages. Example, we have the first portion here. Maybe this the first portions, and this here maybe is the second portions. Maybe we can say that in this cycle, the first portion here, that is this one, we can name it or we can label it as luck in the markets. We can label it as the luck in the what in the markets. Also, the next portion here that the trader actually needs to have in the forex, maybe we can write it as knowledge. As a knowledge. This knowledge always a lot of traders have this knowledge because knowing forex itself is just a knowledge. So everybody in this industry just have some sort of knowledge. Others are just the strategy that we actually use. That is what we can call the knowledge that you have in the forex. And the last thing that we the traders actually need to have is what they call skills. The skills, as you see here, the skills have the highest percentages in a trading lifestyle. In a trading life, you must invest much in skills than in luck, maybe than in knowledge, maybe, and so on, so on, so on. So you can see the how important, how very important to you to invest much in what in skills here. So how you can improve our skills? How you can improve your skills? Just it. You can actually improve your skills through market backtesting. You have to backtest more in the forex so that you can be aware and you can get some skills on the behaviors of some pairs, behaviors of some trades and some currencies in the forex. So I'm trying to just to start these backtesting sessions in every day, every morning, before doing anything, we have to backtest the selected pairs, because there are some pairs in our trading plan there. We just opted to trade them. So before actually trading them, you have to backtest so that you can know the behavior of those words of those pairs. From this month, I will actually start with Goldie. I will start backtesting Goldie, and I will start backtesting here. From this point up to that point, I think it will take almost 1 month, or even not more than 1 month. We take not more than 1 month in backtesting this Goldie from this point up to this point here. We need to know the behavior of Goldie, where Goldie actually takes its orders, how Goldie is reacting, how Goldie is performing. So let me cut this chart right here. Let me cut this chart right there. On these price sections, you can see the gold since it established here in 1833. Since there, the gold was in bullish momentums. It breaks the high, it breaks high. As you can see, it breaks high, and here Goldie breaks this breaks this high. So what is our anticipations? What is our anticipations? Our anticipations here is just as long as the market break this high, as long as the market break this high, our anticipations was Goldie to come here down just before liquidation, maybe up to this area here. After coming to tap this area, then it will start the bullish momentum to break another high there altogether. So Goldie won't come here down until we see the market is violating the bullish momentum or the bullish trends that the market is just creating here. You can see here the market just create this series of highs, lows, high, low, high, low, high. So we want to come here until the market violate this last lower low right there. So let's come and focus with this current price action that the market just actually gave us in this part right here, because we can see the market break this structure right here, and this is what it's low. Before confirming, or before mark this as a break of market structure or as a bullish structure, let's go for the trend verifications. I think you know how to verify the trend. When you go to 3-month time frame, what you can see, we see that the point of breakout is that the position at the highest price right there. So this is the valid break of market structure. As we know now, we have to wait the market until it come here to take its orders, its liquidities. We have to wait the market to come here to take the liquidity. So after the market reaching here, two options you can get. Either the market can perform another shifty and give us information just to go and reclaim this high right there, or the market will come to close in this low here. If the market will close here, we will find any liquidity here inside, then we will drop down up to this words, up to this points right here. Yeah, I think we are together up to that point, guys. So when we see the structure in a monthly time frame, what's next? Just we need to go in a daily time frame just to look for liquidation in process. We need to see a shift here in a daily time frame, and then we will use that shift to come in this monthly area of liquidity. But remember, don't forget to use or to observe how FTA is telling us from monthly time frame to daily time frame. Its FTA time frame here is just a weekly time frame. So before going to daily time frame, we have to visit in weekly time frame so as to know the structure or the price action of a weekly time frame, because the structure of higher time frames are more reactive than the structure of lower time frame. Or we can say that the structure of higher time frames are more powerful than the structure of a lower time frame. So if you see the structure in a monthly, in a weekly time frame, and the structure in a daily time frame, actually consider much the structure of a weekly time frame, because here there are lots of orders, or there are lots of liquidities of market makers. So before going to the time frame, let's visit it, or let's observe how weekly time frame actually is telling us. Once we go there in a weekly time frame, we can see here that the market just gave us this break of market structure. Right here, we have this break of market structure. So before saying that this is in the validation points or not, let's go to monthly time frame just to verify this trend right there, if it is a valid trend or not. When you go there, what we can see that this point of breakout is just a position day at the highest price. So this also is a real trend. Is a real trend in the weekly time frame. So anything can happen right there. In order to come here in the monthly area of liquidity, like in this one, in order to come here, firstly, we need to see the market is violating this weekly structure or weekly area of liquidity. So right here, let's back to monthly time frame. As we already know that the market firstly should come in this area, and we can mark this area as an area of consideration because it happened in FTA's time frame. Let's mark this, and then after market reaching here, we have to observe the reactions of the markets in that point. Let's mark it FTA. That is FTA. So we need to see the reaction of the markets once it's inside here. Okay, let's go to the time frame as a coordinated time frame or subordinate time frame of a monthly time frame. Let's go there and observe the price actions. We need to see the liquidations of daily time frame, so as we will come in a weekly area, and we will come also in a monthly area of liquidity there now. Let's go to the time frame. Yeah, once we go into daily time frame, what we can see here, we can see that the market actually performed a shift here. The market just performed a shift right here, but it performed a shift with no any formation. It performed a shift with no any formation. As this is a daily time frame, we can't wait for the whole days just to wait the market to come here and they come again here down to close or to break this low. We will waste a lot of time. So we will observe the market here once it entered in this area where the market will shift. Then we will use that shift to come here down. To liquidate or to break this watch, to break that's a low. So let's wait in the daily in H1 timeframes as the coordinated time frame of the time frame. So as we need to see the market is performing a shift here inside, then we will use the shift to drop more down. Let's go to 1 hour time frames to wait for the market to shift right there. But if you remember the points or the areas that we as a trader actually need to wait for the market to shift it. Whenever you see the daily performing a shift in the no any structure, just to go to the FTA time frame, lower FTA time frame, that is the 4 hour time frame, go and find where the market just perform the shift, and then mark the formation either outside or inside. There we can see the market just performed the shift and gave us this gave us this outside formation, and also it gave us this inside formation. So once the market will tap here and they offer you any shifty, then you will use that shifty to drop down. Or if the market will tap here and they're giving you another shift in each one time frame, then we will use that shifty to drop where? To drop down. I think we are together. So let's wait and see the price action as the market actually offers us. Yeah, you can see here just the market entered up to this area. I think it was a complex freak. The market came to take a complex freak because in its full time frame, what you can see, we see this momentum breakout in this level. Have a lot of momentum breakouts in this level. So actually, once we see, and you can see here, it tap this area. So once you see the market tap that complex freak, and they give you a shift in a coordinated time frame, means that shift is very valid to you. So right here, you can see just the market trending high, and they come to break this sword, to break this structure right here, because this was high, low, high, low, high. This is the highest price of this structure. So let's go to confirm it to verify it in a 4 time frame. When you go there, you can see, yeah, it is located in high price store. That is a very real, it is a very wide break of market structure. You can see here the markets came to this FTA's time frames, but when you go to 30 minutes time frame, the market didn't perform the shift. The markets didn't perform the any shifted in a 30 minutes time frame. You can see that's why we didn't. That's why we compared this shift of H1 time frame to drop here down. But in case if the market will be shifted here 30 minutes time frame, we wanted to consider this area here because FTA reject the bias. Okay. After the market performing a shift just in H1's time frame, and no any inside formation the market just offered us, we will wait until the market is performing an outside formation so that we can trade it. So the market performing an outside formation, there we can actually trade it. The point of shift is this one here. So we wait the market to give us an outside what? An outside formation right here. Let's try and see. You can see here, wow, we can see here, just the markets gave us this structure, a new structure here by breaking in this low. Market gave us this outside structure by breaking in this low. Let's mark its area. This is just the church of H1's time frame. So after that shifting, here inside you can see that the market gave us a lot of structures, here inside. Even from this area, you can see the markets just rejected here for the first time, second time, this is the third time right here, fourth time here. Then before the market break this structure, just the markets gave us this camouflage structure right here. But also we have the CA structure because it can use this camouflage structure here. Let's go to 30 minutes to refine this camouflage structure. Yeah, we don't see any structure, so we can't use that camouflage structure because no any structure we see there. Actually, we will use this structure here. We will come to use this structure right here as our area of interest or area of liquidity that the market should become here and take our orders so as to go there in a daily low to break this daily what to break this daily low right here. Break the daily low right there. So just come and find the area where the market will come to tap in 15 minutes time frame. Once you go there in 15 minutes time frame, what actually we can see there just the market gave us this liquidity engineering right here. The market gave us this liquidity engineering. We're supposed to put a stop loss right here, but my trading plan does not allow me to put a stop loss here. I can come to find another high That is that one. So actually, we'll take our sell trade right here and we'll risk here. Where is our target? Our target is this daily low. Our target is this daily low right here. Let's put a trade there. And actually, let's see if the market respected our idea or not. This is all the here top loss was almost 69 top loss. And here the target is almost 1,286. According to our risk management plan, that we needed to lose only 10% of our accounts. Example, when you use, if you use the stop loss, we have the balance of 100 US dollar. What the kind of stop loss, what the kind of lot size here we can use. Let's make some simple calculation right there. 69, let's take 70 pips. 70 pips. Let me make a calculation. In order to lose only $10 in this stop loss, how many lot size we can use right there? Let me take some of calculation right here. Be 70 times 0, 22 more. Okay, maybe for this setup, I can use the lot size of 0.04. With that kind of a stop loss, of lot size, actually we can gain, if the market will respect our idea, actually we can gain almost how many US dollar. Let me calculate the almost 257 US dollar we can got right there. We can got right. Sorry, one time. So let's try and see what the market actually did. This drawing. Waiting to see what the market actually did right there. So if your psychology is very poor, actually, I think you can, after looking here, you may see, I missed the entry. The market just trying to give us a formal scenario here, a formal scenario. So the people can think, oh, the market just here has, I did not take our order, so they can enter here, they can enter here. But actually, the market didn't take yet the entry. That's why that now we see the market is coming here to take our entry. Then we will fall down up to this point right there. Let's see. Yeah, you can see actually the market tapped our entry there. And now we drop down. Now we drop there down. Yeah, market just came up to this point, up to the daily low right there, and they tapped the, I mean, and yes, it tapped this low. Remember, this was a daily structure. Let's back to the time frame to see if the market they closed in that area or not. Once we come there, we can see the market just performed the shift right there. And I mean, it performed the gave us a new structure right here. So if the market gave us a new structure, what's next? We have as long as this is a daily structure, daily shift and the daily outside structure, we need to find the liquidity here inside so that we can drop more down. Firstly, up to this weekly area of liquidity. After that, then we will, if the market will break this weekly area of liquidity, we will keep dropping down up to this monthly area of liquidity. Let's find the area where the market is supposed to come and to take the order in a daily formation right there. Here, actually, you can see the market just gave us this rejection, second one, a lot of rejection here. Then before breaking of this zone, before breaking of this, I think this zone here, what you see here, the market gave us a CA entry. The market gave us entry level 2, type 1 right here. So what you need to do is let's go to each one time frame to refine this level. Let's refine that level. On the refinements, what actually we can see right there, we can see that the market actually gave us this liquidity engineering. The markets gave us that liquidity engineering. Yeah, right there. So we can take our sell right here. And for me, due to my risk management, I mean trading plan, I will come to risk there. I'll go to risky somewhere there. So let's see what the market actually did. What the markets actually did right there. Let's actually see. Let's observe these weekly formations where the market is supposed to come and it will they auto react because this is the FTA's time frame. Let's find that area. We can see this area was a free area here. Let's see here inside. Maybe you have this structure. We have this structure. Also, for me, I will come to react here because I don't see any good structure or any good level 2 area of liquidity. I mean level 2 entries here. So I will come to exit in this low right there. Because this is the formation. Even when you put a line graph, you can see it is just a formation. It's just a formation that the markets will come to consume a liquidity right there. So I will come to take my take a profit right there in that formation. Let's see what the market actually did. Yeah, the market just take the entry right there. As you can see, take our entry there. after taking our entry. Where is our target? Our target is this low,
almost 2016 and the 2099
pips. Let's look if the market will reward at that pips. Yeah, the market just came up to that point and they triggered our take it profit right there. So the first back testing, let's end here. Then the next day, tomorrow, inshallah, we will come to see if the market actually came to take the end. I mean, if the market break this low here, or the market will come to see the price action that the market is actually gave us for today. Let's end here, inshallah. I will post this video to YouTube channel, even though not this day. After finishing posting those basic concepts, then I will come to post these videos of backtesting. The video of gold that we did in last 2 days there. Then I will come to post this also. I wish you all the best, guys.